Hello, and welcome back to another exciting lesson in the Starting Out with Sally series. Today we're going to look at the last main statement in your business financials, which is the cash flow statement. I'm going to start by providing a definition of cash flow and then explain how the cash flow statement ties in. The term cash flow refers to the inflow and outflow of cash from your business. The difference between the two is called net cash flow. If more cash has been received than has been spent, then you'll have a positive net cash flow, and if not, it will be negative. Under accrual accounting principles, you're allowed to count the money you've made before you've actually received it. In my second lesson, we looked at the income statement and saw how it shows your profitability for a given period. Although it tells you whether you've made money or not, it doesn't show you how much cash has come into or gone out of your business during that period. This is where the cash flow statement comes in. It tells you how much cash has been received and spent by reconciling the accounts in your income statement and balance sheet. The bottom line of the cash flow statement is your net increase or decrease in cash for the given period. In a business, it's important to maintain a positive cash flow because it means that you have money on hand to do things like pay your expenses, settle debts, pay something back to your shareholders, put money back into your business, and also have something extra for a rainy day. Many times a business may be profitable but struggles because it doesn't have enough cash available to pay its bills. Cash flow is broken down into three sections: operating activities, investing activities, and financing activities. Operating activities are the inflows and outflows of cash that have to do with your core business. This is the cash that you produce from the day-to-day running of your business and involves your current assets and current liabilities. Examples of operating inflows in my business are receiving payment for the sale of furniture or repairs I've done. And examples of operating outflows are paying my suppliers for inventory and other internal expenses, like my employees' salaries. Investing activities are primarily transactions that have to do with the buying and selling of long-term assets like property, vehicles, and equipment. For example, in my business, I've been looking at replacing an old truck that I use for deliveries. If I sell the truck, the money I receive would provide an inflow of cash. Then, when I pay for the new truck, the money I spend would be an outflow of cash. Investing activities can also include other items like buying or selling shares in another company, or lending money with the intent of receiving a return on it. In a business, although you may often have a negative cash flow from investing activities, as more often than not money is being spent, this is ideally offset by the increase in operating cash flow that results from your investments. Financing activities refer to those that have to do with raising capital for your business and repaying your investors. In my case, I've often wondered whether it would be worth selling part of Sally's necessities to someone I wouldn't mind partnering with. In doing so, I would receive additional cash that I could use to expand the business. Another option to raise money could be taking out a loan from the bank. Examples of outflows from financing activities could be the dividends you pay to your shareholders or the repayment of loans you have taken out. Let's now take a look at an example of a cash flow statement. The one shown is a simplified version which shows the three different activities and then summarizes the types of payments or receipts found in each one. In reality, how your cash flow is calculated in some of these sections is a little more complicated, but I'll explain this when we look at the cash flow report later on. What's important is that each section shows the net increase or decrease in cash for that activity. The three values are then added together to give the net cash flow for the period. A line is then usually included showing your available cash at the beginning of the period, and a final one is then given showing your total cash at the end of the period. This is the sum of your net cash flow and the beginning balance. We can now move on to the cash flow report in the Report Manager, the one that I imported using the report utility. I'm going to run it out from there. You'll notice that mine doesn't include any parameters. Just to remind you, parameters are options that you select when a report is run out and determines the information that is included in the workbook. Like the Report Designer report, your cash flow might include a parameter for the fiscal years you'd like to include. Once loaded, my report shows the Report Designer instruction sheet, which has links to the Sage Intelligence learning and support resources near the top right of it. I then have two other sheets which make up my cash flow. Indirect cash flow is the main cash flow layout, and cash flow detail supports it. Both follow the same general structure like the income statement and balance sheet, with report headings at the top, row descriptions below that to the left, and then the report data with column headings to the right. Indirect cash flow includes some extra content which I'll talk about later on. One thing to point out is that both layouts were not created using the layout generator and so are not listed under the Layouts tab in the task pane or in the Quick Generate menu under BI Tools. They were created using the drag and drop functionality of the task pane and so are instead saved as worksheets in the workbook. Looking at indirect cash flow, you can see that it is broken down into the three activities: operating, investing, and financing. Operating activities is derived from the cash flow detail sheet, which I'll go through in a sec. My layout is summarized at an account type level, so under investing and financing activities are the account types that relate to them. Investing includes my long-term assets and long-term liabilities, and financing has my shareholders' equity. Scrolling to the right, you can see that data is provided for both the current and prior years. The values in the layout are the year-to-date period movements for each account type or activity. As a side note, you can see that I have the ability to show or hide my account detail. Because this is not a layout generator layout, and because of the way the layout has been created, the detail in your activities will be shown. However, the ability to hide the rows may not have been added. This is easy to change using Excel functionality. Simply select the rows you want to be able to hide, and then go to the Outline section on the Data tab on the ribbon. Click the Group button, and you'll see the plus icon added. If you would like to ungroup your rows, then do the same, but this time use the Ungroup button. I have unhidden mine and then hidden them again to show you how it's done. If you would like to improve your Excel skills, then check out the Sage Intelligence Academy at sageintelligenceacademy.com. I also provide more detail on it in the next lesson. Apart from offering a number of intelligence reporting courses, it includes a range of Excel ones and provides the convenience of learning at your level, in your own time, and at your own pace. Let's now take a look at the cash flow detail sheet to see how the totals for operating activities are determined. The layout follows the same basic structure as indirect cash flow, providing report data for both the current and prior years. It is included as a separate sheet because the calculations for operating activities are a little more involved. It starts by working out the year-to-date net profit for each reporting period. In my case, this is before tax. Below that is an adjustment section which includes my account types for current assets and current liabilities. These are also year-to-date movements for each reporting period. This section is also referred to as working capital changes. The total for it is calculated by adding up the values from each account type under it. In case you're not sure, the account type descriptions provide a convenient way of telling how cash is moving in the business. Consider first that positive values in the data indicate an inflow of cash and negative values show an outflow. Then, if we use accounts receivable as an example, the positive values indicate a decrease in that account type because money that is owed to me has been paid. Or, in the case of current assets, a negative value implies an increase in the account type because I have obtained them by paying money out. Lastly, my net cash from operating activities is calculated by adding my net profit and my working capital changes. These are the values that are shown in the main cash flow. Carrying on in the layout then, by adding together the totals for each of the activities, I get to my net increase or decrease in cash. Below that, the line for my opening cash balance for the year is included, and then my total cash for the year is worked out. This is the opening balance plus the net increase. The resulting values are also year-to-date figures. To help visualize the change in cash over time, a handy graph is provided. This shows the total cash for both the current and prior year. It's useful because it will allow you to tell at a glance how much cash you have on hand, how it compares to your prior year, whether it is increasing or decreasing over time, and whether it's reaching unsustainable levels. If your cash flow is looking poor, then you can take action to improve it. For example, by making sure customers are invoiced quickly and following up on outstanding payments. The last piece on the layout is a reconciliation section. This compares my total cash with the value of my cash accounts as per the balance sheet to make sure they line up. A variance line is included to make it easy for you to spot whether they do. This brings us to the end of the cash flow statement. In this lesson, I have shared with you what cash flow is, how the cash flow statement is used to report on it, and the benefits of maintaining a positive net value. I've shown you a sample statement, and we've looked at the report provided for my Sage Accounting package. If you haven't done so already, I encourage you to download the report utility and import yours. By becoming familiar with it, it will help you identify areas where you can improve your cash flow and ultimately improve the functioning of your business. We have now come to the end of the 3 financial statements as a whole. In the next lesson, I'm going to summarize what we've covered in each of them and how they tie together. Then, with the time left, I'll teach you about some of the other available Sage Intelligence features you can use to enhance your reporting. Lastly, I'll share some of the other resources that are provided for you to get more information. It's our last one, so I'm looking forward to seeing you there.